Welcome to Sparsha YouTube channel. So for more information, subscribe our channel. You get the more information and knowledge. So today we are going to discuss about the investment plan or savings plan. How to investment, how to save the savings has to be done in the future. So to give the proper information or to give the proper knowledge, we have in our studio Mr. Robin Verse. He has been working for more than 10 years as a personal investment service professional. So welcome you, sir.
Thank you.
So today's my first question is how to plan your savings.
Okay, so this is a much needed one
Yes.
because many times people save something.
Okay.
Okay, but whatever you save,
Okay.
that should have a purpose.
Okay.
That is more important. Because everyone has some goals in life.
Okay.
There are short-term needs, long-term
Okay.
needs. Accordingly, you have to plan and then you have to save somewhere.
Okay.
Otherwise, what might happen is you are saving something here and there.
Okay.
But finally, when you reach that point,
Okay.
you may not have the money needed for you.
Okay.
See, planning is required for everything.
Okay.
Like even if you plan a journey, a small journey of 2
Okay.
days, 3 days, still you plan a lot.
Okay.
You budget the things
Okay.
and the mode of transport
Okay.
and where to stay, how to. There are a lot of things.
Okay.
Here we are planning for the life.
Okay.
So in life, whatever we have to achieve mainly depends on the money we
Okay.
have, and that is why having a financial plan for your life that really makes sense.
Okay.
So considering all the factors,
Okay.
for example, every person should have an emergency fund.
Okay.
Okay, so many a times I've seen people underestimating that.
Okay.
But actually, emergency fund is a foundation for all other savings.
Okay.
Because if the emergency fund is there with you, if something unforeseen event happens,
Okay.
then you don't have to dig into your future savings or the savings
Okay.
which are meant for the long term.
Okay.
So you can manage those with this emergency fund.
Okay.
So to keep your investment plan on track,
Okay.
emergency fund is a must.
Okay.
So that's one part.
Okay.
Likewise, you need to have, if required,
Okay.
life insurance
Okay.
and health insurance.
Okay.
And very importantly, every person has to retire
Okay.
at one point of time. So you need to provide for that retirement,
Okay.
those years of retirement.
Okay.
For that also you have to create a fund.
Okay.
And there are some things you have to do during the working life.
Okay.
Maybe construction of a house,
Okay.
purchase of a car,
Okay.
higher education of children, so
Okay.
such things. Everyone has their own dreams.
Okay.
So for them also you need to provide.
Okay.
So that is why when you have a lot of things to cover,
Okay.
so definitely it makes sense to have a proper plan and
Okay.
go with it.
Okay. So today we'll focus about the investment plan. So can you tell me the difference between the savings and investment?
Yes. Usually people use these words interchangeably,
Okay.
right? But there is a basic difference between these.
Okay.
Now, generally a saving means you are keeping some amount aside from
Okay.
your normal income
Okay.
for the future need. That is
Okay.
savings. And generally people save in banks, post offices and all these things. Okay, but one thing we need to consider when we are doing some kind of a saving is
Okay.
whether that saving is beating the inflation.
Okay.
Now, what is inflation? Inflation is purchasing power of money going down over the years. Now, what happens is, see, today if you have, let's say 10,000 with you,
Okay.
and you are able to purchase some things from that.
Okay.
After 5 years, the same 10,000 may not have the power to purchase the same things.
Okay.
Naturally, the value of the money would have gone down and you will be able to purchase lesser things
Okay.
with that money. So, this is what we call as inflation.
Okay.
Or in other words, we can say cost of things going up.
Okay.
So, it's very important for our whatever savings or investments we do to beat this inflation.
Okay.
In savings, the focus is on just saving something. So, I can say for short term, if you are saving 2 years, 3 years, then saving should be fine.
Okay.
But if you want to beat inflation, especially if you are saving for long term,
Okay.
you have to beat inflation.
Okay.
And for that, you have to invest.
Okay.
Because when you invest, then only there is a possibility of beating this inflation.
Okay.
Now, let's say in India, generally the inflation floats around 6%, 7%.
Okay.
So, if you are investing and you are able to get some 10% of return, let's say,
Okay.
that extra 2 or 3% what you are generating, that is your wealth creation.
Okay.
So, without beating inflation, you are not going to create any wealth.
Okay.
So, that is why savings, yes, you have to do, but they are good for the short term. But if you are thinking of the long term, investment should be an option.
Okay. Yes. Okay. So is investment necessary or just a optional? If necessary, what are the types?
uh, to beat inflation, investment is definitely required, because there is no other way where we can beat inflation.
Okay.
So, and whether you like it or not, inflation is there always.
Okay.
So, you cannot neglect that.
Okay.
For 2 to 3 years, if you need some money, that is okay. That is okay. Inflation may not make a big difference there.
Okay.
But if you are thinking of your goals which are away 7 years, 8 years, or more than that, maybe retirement and all, then inflation is going to create a real havoc in your financial life if you are not taking care of that.
Okay.
And that is why, for me, investment is not an option or not a choice. It is compulsory.
Okay.
So, if you have a life goal which is away more than 5 years or so, then definitely you have to think of investing your money to beat inflation.
Means not according to you, but you say it is a very compulsory or it is a necessary.
Yes, because since inflation is there,
Okay.
to beat that, investment is required.
Investment is required.
Yes.
So what is the ideal to start, or what is the ideal age to start an investment plan? Is there any proper age?
There is no proper age. What I would like to say is, sooner the better.
Okay.
That's why they say in investment language, the best time to start investment was yesterday.
Okay.
The next best time is today.
Today. Okay.
The reason is, investment grows with time.
Okay.
So here the time is important.
Okay.
More than how much you save, it's very important how much time you are staying invested. That is very important, because your time acts like a fertilizer.
Okay.
So when a child is born,
Okay.
immediately it's better to start if possible. If
Possible.
possible, there are many parents who start for their children's higher education at the moment the child is born. I would say wonderful, definitely. So, for your question, my answer would be, when to start? If not started, today itself.
Okay.
Yes.
Can you give me the best example? If the person is started at the age of 30,
Okay.
and the person started at the age of 35, what is the difference in that?
Okay. Yes. So as I was talking about the importance of time in investment, with this example I can elaborate that.
Okay.
Let's say there is a young person aged 30 years.
30 years, yeah.
And he starts investing now, and let's say he's investing 10,000 per month.
Okay.
And till the age of 60 years.
Okay.
That means 30 years
Yes,
time
okay,
he has. Every
okay.
month he's investing 10,000. And
Okay.
let's say his investment grows at 10%
Okay.
growth, CHER. So then, when he reaches 60 years, his money would have grown to around 2 crore 7 lakhs.
Okay.
Okay, with the 10% growth.
Okay.
Let's say there is one more person
Okay.
of the same age, but it doesn't start now.
Okay.
He starts after 5 years.
Okay.
That he starts at the age of 35 years.
Okay.
And he is also continuing till 60 years, let's say. And then, when the second person reaches the 60 years of age, the money accumulated there could be around 1 crore 24 lakhs.
Much like a huge difference.
Huge difference. The difference is almost 83 lakhs.
Okay.
Okay, so the delay was only 5 years.
5 years.
But here you get a huge difference.
Okay.
So this is what happens with time.
Okay.
So that is why it's very important to start as soon as possible.
Okay. So now you tell me, is it better to create or a business or investment? Means I mean to say, see, example, I have 40 lakhs rupees in my hand.
Okay.
I'm going to start a small hotel, putting all the 40 lakhs. Which you prefer that? It is a business or investment? At the same amount of 40 lakhs, I'm going to invest in some of the methods.
Okay.
So according to which is the preferred one?
Okay, now this is a bit complicated.
Okay.
See, actually your own business has the highest power to create wealth.
Okay.
Provided you are good in that business,
Okay.
you know the knack of it.
Okay.
And yes, some luck is also there on your side. So there is no parallel to that.
Okay.
So what I would like to say is, yes, you can invest, but all the money or the money what you have, if you are investing everything into a business, then that is a definite no-no.
Okay.
Okay, because business is a business, it may go down also.
Okay.
So you need to have some backup.
Okay.
Okay, that is why for every person, first thing is an emergency fund. That person should have an emergency fund.
Okay.
And also to take care of his the expenses, you need to have a separate fund for that purpose. Having that, then the remaining amount you are investing or whatever, it depends on your own thing. You have to do your own calculations there.
Okay.
Maybe it reminds me one more thing here. I've seen a lot of people,
Okay.
they work in abroad,
Okay.
and after that they get retired,
Okay.
and then they come here, and suddenly with that whole amount what they have, they start some business.
Business.
Now
Okay.
that is a terrible idea.
Okay.
Now, if as you mentioned earlier, if that person is young and he started his own business, then is no problem. He's got age on his side.
Okay.
If something goes wrong, he can do it. But in this case,
Okay.
the person is already in the retiring age and he has come here and starting a business. And many of the times I've seen he doesn't have a clue about that business.
Okay. No idea at all.
No idea at all.
Okay.
A friend has said and he thinks that's good, he suddenly puts his money
Okay.
there. It is a terrible mistake.
Okay.
So always, such people what they should do is, they always provide for, as I already said already, for emergency fund they need to keep, for the daily expenses they need to keep something extra. And after that, if they are left with something, and then they think that they can risk from that, then maybe they can think of that. But I would always suggest in that case it's better to get the advice from a professional, professional advisors, and plan his finances accordingly.
Okay.
So rather than starting a business straight away,
Okay.
so have a plan and go according to that.
Okay.
Yes.
You say that it's a better letter for an investment.
Yes. And see, for business also, investment is also kind of a business.
Okay.
Correct. So you're investing means you're investing in businesses, different businesses. Suppose you're investing in share market, let's say. So there you're investing in a different kind of companies. So that is a way of diversification. Okay. That is also, but totally you're putting money completely there, definitely is a not good idea.
Good idea. Okay.
Yes.
Now you tell me, sir, what are the importance of investment and what can you say about the benefits of investments?
When we talk about investment, now, yes, I told investment should be done.
Okay.
But there could be a question, right? Like where to invest.
Okay.
Right. So people might say different things. You have to invest there, here and there.
Okay.
But I think it's better to clarify here.
Okay.
Because people, a lot of times they get misled and they lose their money. So I don't want that to happen. So that is why I would like to say, see, basically, historically, if we say, and global scenario, if we say, there is a proven track record that there are only two major areas where the wealth creation can happen, inflation beating returns can be generated. So these two areas are, one is real estate, and another one is investment into stocks or share market, or we say equity investments. Okay. Yeah, real estate may not suit everyone because it needs huge sum of money and a lot of other things also, like maintenance and all these things. So I will talk about this equity investment. So equity investment means you're investing your money in the share market. So share market is nothing but it's a reflection of the economy of the country. So you're investing in the companies. So that way, with the proper knowledge, when you invest, you can definitely create wealth there. Now, what are the benefits? So benefits are definitely beating the inflation. That is what is we are aiming at. Otherwise, you can simply save your money somewhere, get some interest, that is there. But if you want to beat inflation, investment has to be the option. And there also, if you are thinking of investments like a share market investment, with the proper knowledge, if you go, then definitely you have the chance of creating wealth.
Okay. Is there any risk involved with the investment?
Yes, risk is there everywhere.
Okay.
So not only in investment, our life revolves around risk. So if you are going out of the house, then again there is a risk. Somebody might come and hit you on road. That is there. When you are going by riding a two-wheeler or a car, there is a risk of accident. Or I would say fire, for that matter. Fire itself is a risk, right?
Yes.
So, but we keep fire inside the house itself. We are getting benefit out of that. So that's because, see, risk is there. But there are two types of risk. One is a manageable risk, another one is non-manageable risk. So taking a risk which is non-manageable is definitely, it's a game of the fools. You should not do that. But if the risk can be managed and if there is a benefit in it, then there is, you should not stay behind. See, in the house what we do, we use fire and get benefit out of it. We cook food and all these things. Likewise in investment, see here, to beat inflation we have to invest. And definitely there is a risk. What is a risk? Risk of losing money. And when that risk arises, because if you do not understand that investment and you invest in wrongly, and if that investment doesn't suit your time period, that is you have some specific goals in life, after certain years you have to complete certain, but that is not matching this investment. Its time horizon is different, this time horizon is different, then there is a chance of losing money. So here, first point in managing risk is having the knowledge of what it is, understanding that. Secondly, following the rules. When you go for any, there is a rules behind that. So you have to follow those rules. You have to follow the discipline. And very basically, I must say diversification. That is a very important thing. So do not be concentrated on one thing. Like as we said, do not put all the eggs in one basket. Because if the basket falls, all the eggs will go. So when it comes to an investment, let's say share market investment, there are a lot of sectors. You have to distribute your money accordingly. So risk is there, but there are ways to manage. So we have to manage, and then we can get benefit out of that. Yes.
Okay. Should we get the health insurance and life insurance? If so, yes, then what are the benefits we'll get it?
Here, health insurance, I must say, it's a must for everyone. The newborn child to the person who is very old in age. For everyone, health insurance is a must. There is, we can't neglect that part. Because anybody's health can deteriorate at any time, or it could be health related, it could be accidental related injuries, whatever. Whenever a medical treatment is required, you need to spend some money. And whenever that need arises, usually you may not have time, or sometimes you may not have money also. So what happens is, you may have to dig into your long-term savings. Now, if you dig into long-term savings, then yes, this need might be taken care by now, the present need. What about the future? What about your retirement? What about the higher education of your children? Right? Because investment needs time, right? So in between you are breaking it, then you may not have that much time to rebuild it again. So that is why it is wise to have a health insurance, so that if such need comes in, then you have something there as a backup, and you can use that money, and your savings or investment could be safe. But when it comes to life insurance, it depends. Every person may not require a life insurance. If there are financial dependents on you, then you need life insurance. If there is a person and there are no dependents on him, if something happens to the person, but still the whatever the family members, they are totally independent, if they are, then there is no need of life insurance, because the purpose of life insurance is that to provide for those the dependents in case of the demise of this person. So that is why, if there is a need, yes, you have to do. If there is no need, definitely no need of doing it at all. Maybe I can add one more point to that. Now, life insurance means where I should say. There are life insurance also, it has got a lot of products. Normally what people do, they keep money in endowment policies, money back policies and all. Like they use life insurance for savings. So I would say, do not use life insurance policies for savings purpose, because the returns are very minimal there. Instead, go for term insurance plan. So term insurance plan is a plan with a very minimum premium. You are getting a very huge coverage, and that makes sense. So coverage you can cover by that. For the same coverage, if you are trying to get it through an endowment policy or some other policy, you have to pay a very huge premium. So that is why take a term insurance premium policy where the premium is very low and with a high coverage, and whatever money you can save from there, from that premium, because you are paying less there, so some money remains, you can invest that money in instruments like mutual funds maybe. Then your financial life also, it will get better. Yes.
Now I'll give the best example about the gold. The gold rate was in 1947, 89 rupees, present 85,000 nearby. So what do you suggest for that?
I would say it's a very good question, because these days the gold rate is spiking, and people are thinking, should we invest in gold and all these things. And gold has been very favorite with the Indians, right? And the statistics you gave is really excellent. You said in 1947 it was 89 rupees, and now around 85,000. Now here we are thinking of a time frame which is almost 78 years. So in 78 years, if you see, the money has grown from this to that. If you calculate and see, you will get the answer as it has grown around 9.1% per annum. CAGR growth 9.1%. But if the same 89 rupees, if you had put in the equity market or the share market, the proper investment, if you had done, then definitely that money by this time would have grown to more than 1.5 lakhs. Okay, so because if we see on average, equity markets have given the returns in the range of till now, 14 to 15% in that range.
Okay.
So very comfortably you would have earned that kind of return. So what I would like to say is gold, yes, it may give a return, but it is not good in creating wealth.
Okay.
The role of gold is to maintain the purchasing power of money.
Okay.
So normally the gold rate matches the inflation rate.
Okay.
So the rate of gold increases at par with the inflation rate. That is why you are able to retain the purchasing power of money, but it will not create wealth for you.
Okay.
So for creating wealth, you have to beat inflation, and that is possible only with investments. Like I already said, could be equity or real estate that way. So no harm in including gold in your total investments, but don't put all money in the gold. So what I would like to say is maybe around 10% or the max 15% of your total investments could be in gold, but not all.
Not all.
Yes.
See, one more example. If the person has a salary of 20,000 per month, same like 1 lakh in business profit, another person. So for these two people, what you suggest?
For a person who is earning 20,000 per month.
Per month as a salary.
As a salary.
Yeah.
Okay. Now for him, see, definitely he has to take care of the expenses and all.
Okay.
So see, it's very difficult to give the exact thing like you should do like this, like that, because it goes on a personal level. So we need to see the background of the person, his income, his expenses, his life goals, all things we have to consider. But on a generalized basis, what I would like to say is around normally maybe 50% he might need for his daily expenses, maybe transport, food and all these things. Maybe around 20% he might use for lifestyle expenses, like it could be related to mobile or his other things, lifestyle expenses, what we normally maybe a kind of some entertainment for himself, all these things. So at least 30% he should aim to save. Okay, so yeah, if you can reduce expenses, you can save more. Definitely, that is a good thing if you can do that. But on a reasonable basis, at least 30%. So which would come to around 6,000 per month. You should look at least saving that amount. And one more thing you have to consider is that retirement is a very important goal. So for that, he has to start investing from the first salary itself. So at least 10% of his income should go towards the retirement. So in this case, I must say 20,000, around 2,000 you should keep aside every month for retirement itself. And then the 4,000 what he has, that 4,000, yes, he can invest in such a way so that he is able to, or maybe at least is able to take care of his major milestones in life in future, like he might have to purchase a car, a construction house, or whatever it is. For such goals he can keep aside. But provided, I would like to say, these become important only after emergency fund. So if emergency fund is a priority, so if it is not there, is to start build that first, and then health insurance. So if those things are there, then yes, according to this plan, what I have said, he can think of. And for a person who is earning a business income, and you said he made 1 lakh profit, for him, see, what I would like to say is investment should be a continuous activity instead of only putting now and then. It should be a continuous activity. So it's better to have a regular thing at that. So he should have a proper asset allocation, like how I should put money. So, but still, in this case, if that person wants to create some wealth and just wants to put money somewhere, then I would like to suggest, if supposing he is a young person, maybe the allocation of 70% to equity, 20% into a debt fund, that is debt in the sense where you are getting interest, it could be bank also, and 10% into gold. That could become a kind of ideal allocation for that person, provided he is a young person. So it's on a general view. But exact allocation, we need to see the person's age and other things. Yes.
See, benefits of a long-term investment, 100% there will be benefit. If long-term is how many years?
Long-term is how long? That's a question. Yes. Generally, see, we have goals, short-term goals, mid-term goals, long-term goals. Yes. So long-term, I would say, generally above 7 years, I must say. Above 7 years. Before that, say if you need money within 1-2 years, it will become a short-term goal. If you need money in the range of around within 5 years and all, we can consider it as a mid-term goal. And long term is definitely after 7 years. So that could be plus 7 years in the sense it could be 10 years, 15 years, 20 years. So that way. So basic thing here is long term means it should be attached to your investment goal.
Okay.
So suppose you're investing for retirement,
Okay.
you should not think of taking out that money till you retire.
Okay.
Okay, so that is how it is. So long term is a long term after 7 years, and you should think of that money or withdrawing that money only when you reach your particular goal for which you have invested that money. Yes.
So now people speak about the safer side. Now people say that keeping the amount in the bank, it's a safer side. So what you suggest about the safer side? Depositing in investment or depositing in the bank?
Okay, so generally banks are considered as a
Safer side,
safe havens for money, and from traditions it has been there. But question is how safe it is again,
Okay.
because here there are two things to consider. One is inflation.
Okay.
If you are keeping your money there, inflation is at 7% and you are getting interest of 6%.
Okay.
You are getting some interest, yes. But is the money retaining its purchasing power? Definitely no. So that itself is a risk of keeping money in the bank. But bank has its place.
Okay.
Like which one you can keep in the bank? You can keep the money like which you need for monthly expenses, or the money which you might need within 2 to 3 years. For such needs, banks are perfect. No problem with that. Even the emergency fund you can park in a bank. That is definitely yes. So, but long term needs, and if for retirement you say I'm saving in a bank, then definitely it's a terrible mistake what you're doing. So that has to go into investment. Now the money, how much it is safe? So generally we say banks are safe. Yeah. But actually, suppose you keep 1 crore in the bank, and out of this 1 crore, if the bank goes for a toss, if the bank goes down, how much will you get back? Bank is entitled to give you only 5 lakhs out of that, provided they have paid that insurance. There is an insurance which that premium they have to pay. So if something goes wrong, then that insurance company can pay back to the investor. So in that case, so it is maximum 5 lakhs what you are entitled to get, not full 1 crore. Yeah, but yes, but supposing it's a nationalized bank, and we can say government may not allow the bank to fail. They may support. In that way, it is safe. But actually, logically, if you say only 5 lakhs are safe, not more than that. Okay, that is one thing going for the bank. If you consider the investment, if you invest it properly, you invest in bank, your money is going only in one bank. Let's say if the bank goes down, your money is at risk. But you are investing. If you are investing in different companies, then some companies may go for a loss, and that is always there. But since you invest in a lot of companies there, then if 3-4 companies also go down, then because of the other company's performance, your money is there in other companies also. Then this loss can be recovered, and you are still able to get inflation beating returns. So there is no chance of money getting completely when you are investing in diversified fashion. There is no chance that complete money is lost. So in that way, I might say investment is also a safer option. Yes.
Okay, sir, thank you so much for being with us and giving us the beautiful session about the investment plan. So thank you, sir. Signing out this episode. Watch it and share to other people. You get more information and knowledge. Thank you.